Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Thursday, May 13th, 2021. And here are our top stories. The SEC tackles the GameStop saga, the ESG boom, and cryptocurrency. Joining me now to discuss this and a lot more is Jason Bisnoff. He covers the wealth management industry for Forbes. Jason, so great to see you. Thanks so much for joining us on the program this morning.
Always a pleasure, Jeff. Thanks for having me again.
Yeah, you have a great beat. You cover the wealth management industry and all the pieces that kind of are around that. And one of the areas that you focus on is the Securities and Exchange Commission, and in particular, Chairman Gensler, who was recently, within the last few months, approved by the Senate to head up the SEC. What's top of mind lately for the SEC?
Well, it's interesting because it's almost twofold when you join a prudential commission like that, is that there's stuff that you choose to focus on going in that has been boiling over time, be that ESG disclosures, be that regulation of best interest and fiduciary standards, but it's also stuff that gets thrust upon you. And the two big things that have been thrust upon the chairman are the GameStop situation, which is something that obviously roiled markets and was a front page story across the country recently, and the Archegos capital management situation, which blew up markets and left as victims some of the biggest financial institutions, from Credit Suisse to Morgan Stanley, had some significant losses. So those are the kind of things that have been thrust upon him that he'll have to look at and deal with. And he recently testified in front of the Senate Banking Committee about some of his plans along those lines.
Yeah, let's talk about the GameStop. It seems like, I know you brought up Archegos, and we'll talk about that in a second, but there's a lot to unpack here because this is really around the regulation oversight of online brokerages. In this case, it was Robinhood, but there are several others, many others that are kind of in the same vein as a Robinhood. What's the issue here? I mean, has there been, since you last wrote a piece on this, has there been movement in terms of really kind of digging down into how these online brokerages operate, the importance of meme stocks, and whether or not, how do you monitor that in terms of making sure that people are protected, especially, regular investors, people like myself and you who, don't have inside knowledge?
Well, the problem is that it's not really an easy solution. It is not as easy as some of the other solutions the SEC has taken on in the past. So there has been a lot of discussion about it, but as far as my viewpoint, there's not been a ton of solutions put out there. And I think it's because it is a very complex issue. You want increased access to markets for non-traditional folks. And the fact that Robinhood got a whole generation that was really market agnostic interested is a good thing. But the gamification of stocks is something that is the regulators are wary of. There are a lot of risks that are misunderstood or not understood correctly, namely with options trading, where you can leverage a ton of risk and reward with not a lot of money. But also on the institutional side, short selling is something that they're looking at, because this issue is really complex. It is not as simple as memes are bad, GameStop bad. It is much more complex. And so they are also going to look at short selling, which is something that, whether you like what happened or not, the folks who bet on GameStop did recognize an unsustainable short sell by several of the most sophisticated hedge funds out there. And so avoiding that in the first place is also something that the commission will likely look at. But like I said, it is the kind of thing where the problem is a lot easier to identify and a lot more complex than any potential solution that's been floated yet.
Yeah, I don't mean to portray it as, hey, you're right, GameStop good, short selling bad. It is never that easy, and it's really got to peel back this proverbial onion, in order to understand how to come at these larger, broader issues. Let's talk about digital currency, because this has been something where we've seen the emergence or growth of Bitcoin over the year. We've seen cryptocurrencies like Dogecoin kind of percolate and pop up, Ether, Ripple, others, and that seems to be something that the chairman indicated that he and the SEC were going to really tackle. How do you deal with digitization and digital assets? Because look, they're here, and it looks like they're here to stay, and they're becoming more readily adopted by even lay investors. Yeah,
well, this one's another one that has really vast tentacles. I mean, just the idea of what the IRS is going to do about the fact that they're going to want to realize the capital gains on people who have made exorbitant returns in the last year on these cryptocurrencies. Luckily, this is an issue that, as opposed to GameStop, Archegos, other things that kind of got put on the plate of Chairman Gensler, this is one that was the next chairman was going to have to deal with, or chairwoman was going to have to deal with no matter what. And he happens to be really well equipped to do that. He taught a class at MIT around digital assets. So this may be the perfect person to kind of finally figure out what to do about this. And to some extent, the foundational question is going to be, what are they? Are they currencies? Are they securities? Are they equities? Because once you figure that out, there is precedent and law around trading of securities, equities, commodities. Not that it would be a commodity, but once you classify it, a lot of the work gets done. And I think Chairman Gensler is actually in a really good position as someone who is really in touch on this, which not always, believe it or not, with the average age in DC getting older and older, they're not always the most in touch with the most cutting edge things. He happens to be someone who is very much in touch with the digital asset space. And like I said, is taught at MIT about it.
Yeah, and we've actually seen that during some of the congressional hearings where we're talking about Twitter and Facebook and some of the congresspersons and senators really, they need a lot of education about what they're talking about. And to that end, Jason, I want to just talk briefly about one of the things that they're wrestling with, at least I've been reading in your publication and other places, exchange traded funds when it comes to Bitcoin, right? And that is something that I've seen Fidelity try to get into this space and create the first ETF around a cryptocurrency. Look, it's coming. This is an issue that they're going to have to really jump in, to your point, whether it's a commodity of some type or whether it is an actual security. This thing is coming.
Yeah, and I recently wrote a story about how Coinbase was the first real opportunity for a lot of wealth managers really didn't want to touch cryptocurrency, not because of any nefarious reason. It was a big thing to tackle. And they definitely were seeing pressure because anything that earns the kind of returns that cryptocurrencies have earned over the last few years, a wealthy investor is going to call you and say, why have I not been in on these returns? But they have not really wanted to touch it. And Coinbase, as much as it has not had the best debut on the market as far as trading prices, is this first place where a wealth manager, old guard wealth manager, has a security they can trade in that I think has at least some tangential benefits from the growth of the crypto market. So I do think it did break ground of sorts, but I do think, like you said, this train is going whether people want it or not, and it is very much a battle between the old guard's way of thinking and something that is really new and moving really quickly. I think, I think too, the fact that Jamie Dimon has been repeatedly down on cryptocurrencies and their effectiveness, and at the same time, his bank just announced they're going to start offering wealth management clients access. So when you have those two things competing, it is a really interesting situation where you have the head of the biggest bank in the country saying, oh, this is, I don't see the usability of this. And you have at the same time is people who work for him saying, letting out a memo, we are now offering access to this thing that our boss says has no usefulness.
Yeah, a case of maybe talking out of both sides of the mouth. Well, Jason, I want to go to a quick break because when we come back, we haven't forgotten about it. We're going to talk about it. We'll talk about the SEC and environmental, social, governance funds, ESG. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans, and we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Jason Bisnoff of Forbes. Jason, JB, thanks so much for staying with us this morning.
Yes, always happy to be here.
So I kind of teased it out. Look, we talked about ESG at the beginning as one of the major items that the SEC, the Securities and Exchange Commission, was going to tackle. And it is projected that $1 trillion these assets will hold by 2030. That's at least one estimation. It could be more, it could be less. But these investments certainly are picking up, Jason, and there's a lot of concern about greenwashing and disclosures and knowing what you're investing in.
Yeah, I think this is one of those situations where, like I said, the SEC sometimes has stuff that when the chairperson comes in, it is, oh, this was obviously going to be on my plate. This is a mixture of that, but I think the rate at which it's accelerating is also catching maybe them a little off guard. I think that the ESG explosion is a supply and demand issue. And the demand has greatly outstripped the supply when you really look into and you delve deep. I recently interviewed Tariq Fancy, who used to head up sustainability at BlackRock. And he basically thinks that there's a lot of problems with greenwashing, a lot of problems with the designation, because right now there's no one making sure that your ESG fund doesn't invest in the things that are the antithesis of ESG, be it Smith & Wesson, be it ExxonMobil. And so I think that the commission is going to have to look at, and I think they know this, they're going to have to look at some sort of designation or some sort of regulation of what determines an ESG fund, because the demand is soaring and the supply needs to kind of catch up, because as much as there is supply, you can go to any major fund complex and find a ton of ESG funds. No one really knows when you delve in deep what that supply looks like.
Yeah, and to your point about regulation, we've seen the European Union jump in here, maybe a little bit different, but there's categorically how you are decided upon to be satisfying the ESG metrics. So that clearly Europe may be a little bit ahead of the U.S. And you bring up a really good point about greenwashing and knowing what investors should know about the underlying investments. I got to think that there's a great business model out there for doing due diligence. You could do due diligence from now until the end of time on these investment products, because it's not just buying the Smith & Wessons. It's what about you bring up guns. It's what about the springs that go into the gun? Who's producing that? The ammunition, the different components that make up, for example, a oil pipeline. There's a lot of different ways to look at this, and it's not just like the crypto asset, the digital asset, the GameStop conversation. It's not a 0-1 sum game.
Yeah, and I think a big thing is that there has been a ton of strides done in this. Morningstar, who obviously is one of the best in class at classifying things, their original globe ratings for ESG funds, which when I first heard this, I couldn't believe it, compared it only to in your class. So if you were the least dirty oil company, you got 5 globes out of 5. They have moved well past that. So there has been a lot of advancement on this issue. But I do think it is an area, like you said, ripe for innovation. Though I do think there's a possibility that if you're an ESG-minded person, the end goal is actually to have this be a metric that is standard across investment. It's something that we really can't fathom because we view it as this niche. But when you talk about $1 trillion, which I think is a conservative estimate, to be honest, Climate change is only going to advance. We are not going to stop that train from going. And so I think the idea that when you're looking at any investment across the board, you'd be looking at P to E the same as ESG score, I think is something that is not as far off a reality as we think it is.
Yeah, and Jason, you really have, we're talking about the SEC today, but you also cover wealth management and the wealth management industry. How are they looking, in talking with your relationships with some of the largest wealth advisors in the U.S., how are they thinking about ESG? Are there concerns about putting a client, understanding what a client is telling them that they have these are their values, their morals, what they want to, their investment philosophy, and then actually implementing that? Are there some concerns there from some of the largest firms out there?
Well, the demand has won the day. ESG is now table stakes for most wealth managers. And one of the most interesting components of that is that there are staggering statistics, I don't have them in front of me, around how many wealthy heirs fire their dad's golf buddy, who their dad thought was their financial advisor. The kid always thought it was just dad's golf buddy. Among the things that can create that relationship is that my generation, a younger generation, is very interested in ESG and the morals behind our investments. We are the generation who will grapple with climate change more than any before us. And so I do believe that wealth advisors, and there's nothing wrong in this, are looking at this as self-preservation. The idea of ESG will, if it isn't already, which it may be, it is going to be table stakes. It is going to be something that if you don't offer, you are not doing your job correctly. It would be the equivalent of not offering tax planning as a full service wealth advisor at this point. So I think that, like I was saying on the earlier conversation, where the supply is kind of the issue at this point and what the SEC has to deal with, the demand, the jury's out. That's over. The demand for ESG is only soaring year after year. You couldn't have had different presidents, if you go to the last three presidents, different philosophies on climate change, different philosophies on the environment. Yet through every one of those presidents, ESG funds grew exponentially and performed well. The demand is sold. It's over. This is something people want and are going to demand of people advising their money. Now it's just a matter of what do we do on the supply end to make sure that they're getting what they demand.
And you bring up investors, people around your age. Is there concern around the greenwashing? If you could just take a moment maybe to share some of the insights or anecdotes from some of your friends, your friend group, when you talk about these issues. Is there concern about, hey, what am I buying? Whether it's a mutual fund, an exchange traded fund, a stock, is there concern about, hey, am I getting what I asked for? If I bought it through Robinhood, if I bought it through Acorns, if I bought it from some other online or real brokerage. And not a real brokerage, you know what I mean, like an actual physical brokerage, not a real brokerage. We're all real brokerages.
Well, I think it's going to be that next level of sophistication. I think that right now people are really happy that there's a supply of things that say ESG on them. And I do think that's where my conversation with Tariq Fancy from BlackRock, formerly of BlackRock, really talked about that. He has such a different level of insight into this, but it is going to be this next level of sophistication. I think right now a lot of people are just happy, especially unsophisticated investors who don't have the luxury of an advisor they can call 24/7 who is there for them. When they're just buying it on your online brokerages, are just happy that that is offered. But it's going to be, and this is where I never have envied the work of anyone in Washington, but this is where I don't envy Chairman Gensler's work, is where do you draw the lines on what is ESG? Because it's easy to draw a distinction on ExxonMobil or Smith & Wesson. These are not hard decisions to make, but the majority of people see where they are right and where they are wrong. But where do you draw on Facebook, for instance, which proliferated misinformation leading to the January 6th insurrection, which has been really not great on misinformation around vaccinations. So Facebook, one of the FANG stocks, the biggest stocks, can you consider that a bad ESG buy? I'm not saying I know the answer, but I'm saying the people who make that decision are going to have a really tough time kind of separating the wheat from the chaff.
Yeah, that really brings a really good point, and probably we need to dedicate a whole nother whole nother segment to that. JB, we're going to have to leave it there. I really appreciate you coming on and great catching up with you, and look forward to having you back on the program again very soon.
Take care, Jeff. See you soon.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more all in one place, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow for another new and exciting episode of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.